Oh man, on the weekends I have a little more time on my hands and I'm just watching this, and this is like such a classic. I just want to play this for you guys, react to this. This is like in hip hop, you could do like a freestyle, and if you do a really good one, everybody's like, oh, this is crazy. This is a stock market equivalent. Like, just you're about to get so many gems dropped on you right now. Like, it's just beautiful. That's all I know. I hope you guys enjoy what we're about to get into here over the next few minutes. Like, this is legendary. That's all I can say about it. Hit the subscribe button if you haven't. Let's go.
What I do today, briefly, is I don't know what I'm supposed to do with this gavel. I've never had one of these things before. I'm going to try and say some words on the things I've used over the years when I was a...
That's Peter Lynch, by the way. If you don't know him, look him up. Look him up, okay?
I think they make sense. I think they make a lot of sense for investors, and I frankly think it's a tragedy in America that the small investor has been convinced by the media, the print media, the radio, the television media, that they don't have a chance, that the big institutions with all their computers and all their degrees and all their money.
The sad thing is, this is from 94, so we're talking, this is 17, 18 years ago, and this is still, unfortunately, the thing that's fabricated out there, like, you don't have a chance as an individual investor. BS.
All the edges, and it just isn't true at all. And when they're convinced, when this happens, when this occurs, people act accordingly. When they believe it, they buy stocks for a week, and they buy options, and they buy the Chile fund this week, and next week it's the Argentina fund, and they get results proportionate to that kind of investing. And that's very bothersome. I think the public can do extremely well in the stock market on their own. I think the fact that institutions dominate the market today is a positive for small investors. These institutions push stocks on usual lows, they push them on usual highs. For someone that can sit back and have their own opinion and know something about an industry, this is a positive. It's not a negative. So that's what I want to talk about.
Oh my gosh, like, I have not, over the past 12, 13 years of me being in the stock market, I have not paid attention enough to some of these old classics by Peter Lynch, and I'm just like, this guy sounds like exactly the same stuff I preach. Like, oh my gosh, it's ridiculous.
And the single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say, the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks. And this is the kind of stock people like to own. This is the kind of company people adore owning. This is a relatively simple company. They make a very narrow, easy to understand product. They make a 1 megabit SRAM, CMOS, bipolar risk, floating point data I/O array processor with an optimizing compiler, a 16 dual port memory, a double diffused metal oxide semiconductor monolithic logic chip with a plasma matrix vacuum fluorescent display. It has a 16-bit dual memory. It has a Unix operating system, 4 whetstone megaflop polysilicon emitter, a high bandwidth, that's very important, 6 gigahertz, double metallization communication protocol, an asynchronous backward compatibility, peripheral bus architecture, 4-wave interleave memory, a token ring interchange backplane, and it does it in 15 nanoseconds of capability. Now, if you own a piece of crap like that, you will never make money. Never. Somebody will come along with more whetstones or less whetstones or a bigger megaflop or a smaller megaflop. You won't have the foggiest idea what's happened. And people buy this junk all the time. I made money in Dunkin' Donuts. I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have, I can understand it. And you laugh. I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports. They buy a microwave oven, they do that. They ask people what's the best kind of radar range or what kind of car to buy. They do research on apartments. When they go on a trip to Wyoming, they get the Mobile Travel Guide, or California. When they go to Europe, they get the Michelin Travel Guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk.
It's the same thing nowadays. The same exact thing.
Look at the balance sheet, and that's what you get for it. And that's what we're being driven to.
Spitting.
And it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up. Coca-Cola, this is very magic. It's a very magic number. Easy to remember. Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market.
Yeah, that's something I try to always preach in the channel. It's like short term, anything can happen around a stock price. You can have a stock tank for whatever. They reported bad earnings. It's out of favor in the market, tax loss harvesting, whatever, okay? At the end of the day, people move on, things move on, and that company will be valued long term. However, they do as far as their business. And whatever their net income does over the coming years, they will reflect that in the stock price. I've never seen it not happen. And I've been doing this for 12, 13 years. I'm sure Peter Lynch did it a lot longer than me. And I've never seen it happen where it's worked any other way.
It's a total waste of time. No one can predict the stock market. They try to predict interest rates.
No one can.
I mean, if anyone would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires. And no one can predict the economy. A lot of people in this room were around in 1981 and 82 when we had a 20% prime rate with double-digit inflation, double-digit unemployment. I don't remember anybody telling me in 1981 about it. I didn't read. I studied all this stuff. I don't remember anybody telling me we're going to have the worst recession since the Depression. So what I'm trying to tell you, it would be very useful to know what the stock market is going to do. It'd be terrific.
That time period, you hear some bring that time period up, and they worry specifically because inflation has gone high recently about could we get into another one of those situations.
To know that the Dow Jones average a year from now would be X, that we're going to have a full-scale recession, or interest rate's going to be 12%. That's useful stuff. You never know it, though. You just don't get to learn it. So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes. And I really believe that. Now, I'd be fair. I'm talking about economics in the broad scale, predicting the downturn for next year or the upturn or M1 and M2, 3B and all these M's. I'm talking about economics to me is when you talk about scrap prices. When I own auto stocks, I want to know what's happening to used car prices. When used car prices are going up, it's a very good indicator. When I own hotel stocks, I want to know what hotel occupancy is about. When I own chemical stocks, I want to know what's happening to the price of ethylene. These are facts. If aluminum inventories go down 5 straight months, that's relevant. I can deal with that. Home affordability, I want to know about when I own Fannie Mae or I own a housing stock. These are facts. There are economic facts and there's economic predictions. And economic predictions are a total waste. And interest rates, Alan Greenspan's a very honest guy. He would tell you that he can't predict interest rates. He can tell you what short rates are going to do in the next 6 months. Try and stick him on what the long-term rate will be 3 years from now. He'll say, I don't have any idea. So how are you, the investor, supposed to predict interest rates if the head of the Federal Reserve can't do it? So I think that's, but you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93.
Nowadays, the stock market is so much more stable than it used to be, back prior to, the 90s, 80s, and any time before that. And the reason being, at the end of the day, is one, you have the Fed backstop because so many people are invested in the stock market now. So many people have their entire, net worth invested in stocks, right? Think about all the baby boomers, retirees. Like, where's most of their money held? It's either in real estate or it's in the stock market, right? And so the government definitely tries to backstop any stock market crashes. And overall, there's just so much more money in the stock market now. It's just a much more stable place than it was prior. And I understand we see these, fluctuations, whether it be certain groups of stocks, like let's say small caps falling a ton over the past 6-9 months, or whether it be, what happened in the Rona crash. Even what happened in the Rona crash, right? The stock market falling 35%, that wasn't even that volatile when you consider the magnitude of that situation, right? A once in 100-year health event, and we only fell 35%. Like, you would have thought we would have fallen 60, 70%, right? So it's some food for thought.
For years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own. So I think that's the key.
The pain is in that middle part, right? You gotta fetch it from everybody. Obviously, somebody like myself on YouTube, if I buy into a stock, the stock price goes down in the short term, you got to hear how much of an idiot you are, right? Same thing for you guys. If you tell your family or friends, hey, I love this stock, and you buy it at $20, right? And then it's down at $14, $13, $12, $10. Everybody's like, dude, you're an idiot, right? And then, a few years go by, and a lot of times you end up being right? And then, where are those same people? They're not there. All they start saying is, oh, man, I wish I would have bought it.
Another key element is that you have plenty of time. People are in an unbelievable rush to buy a stock. I'll give you an example of a well-known company. Walmart went public in October of 1970. 1970 went public. Already had a great record. It had 15 years performance, great balance sheet. You could have waited 10 years saying you're a very conservative investor, you're not sure this Walmart can make it. You want to check, you see them operate in small towns, you're afraid they can only make it in 7 or 8 states, you want to wait till they go to more states, you keep waiting. You could have bought Walmart 10 years after they went public and made 35 times your money. If you bought it when they went public, you would have made 500 times your money, but you could have waited 10 years after Walmart went public and made over 30 times your money. You could wait 3 years after Microsoft went public and made 10 times your money. Now, if you knew something about software, I know nothing about software. If you knew something about software, you would have said, these guys have it. I don't care who's going to win, Compaq, IBM. I don't know who's going to win Japanese computers. I know Microsoft, MS-DOS is the right thing. You could have bought Microsoft. Again, I'm repeating myself. Stocks are not a lottery ticket. There's a company behind every stock. And you can just watch it. You have plenty of time. People are in an amazing rush to purchase a security. They're out of breath when they call up. You don't need to do this. It's you need an edge to make money too. People have incredible edges and they throw them away. I'll give you a quick example of SmithKline. This was a stock that had Tagamet. Now, you didn't have to buy SmithKline when Tagamet was doing clinical trials. You didn't have to buy SmithKline when Tagamet was talked about in the New England Journal of Medicine or the British version, Lancet. You could have bought SmithKline when Tagamet first came out, a year after it came out. Let's say your spouse, your mother, your father, you were a nurse, you were a druggist, you're writing all these prescriptions. Tagamet was doing an amazing job of curing ulcers, and it was a wonderful pill for the company because if you just stopped taking it, the ulcer came back. See, it would have been a crummy product that you took it for $1 and it went away, but it was a great product for the company. But you could have bought it 2 years after the product was on the market and made 5 or 6 times your money. I mean, all the druggists, all the nurses, all the people, millions of people saw this product. And they're out buying oil companies, or drilling rigs, It happens. And then
I agree. I think about all the people that have worked for Amazon over the years, right? Imagine you work for Amazon, 2008, 2010, 2012, and you're in the, warehouse and whatnot, and you're like, man, we just keep getting more orders, more packages. It's like, man, why not load up on that dang stock? Like, if you're there seeing it, firsthand, there's nothing more powerful than that.
3 years later or 4 years later, Glaxo, even a bigger company, it's a huge company, a British company, brought out Zantac, which was a better, at that time, an improved product. And you could have seen that take market share, do well. You could have bought Glaxo and triple your money. So you only need a few stocks in your lifetime. They're in your industry.
I will say one company that a lot of the folks that work for that company did end up buying shares or getting shares, one of the two, is actually good old Tesla Tesla. Like, I know the amount of people I just know personally that either work for engineering of Tesla or supply chain or whatever, that own substantial portions of, Tesla stock, 6 figures, 7 figures, it's a pretty high number.
I think of people, if you'd worked in the auto industry, let's say you're an auto dealer the last 10 years, you would have seen Chrysler come up with a minivan. You've seen, if you're a Buick dealer, a Toyota dealer, Honda dealer, you would have seen the Chrysler dealership packed with people. You could have made 10 times your money on Chrysler a year after the minivan came out. Ford introduced the Taurus Sable, the most successful line of cars in the last 20 years. Ford went up 7-fold on the Taurus Sable. So if you're a car dealer, you only need to buy a few stocks every decade. When your lifetime's over, you don't need a lot of five-baggers to make a lot of money starting with $10,000 or $5,000. So in your own industry, you're going to see a lot of stocks, and that's what bothers me. There are good stocks out there looking for you, and people just aren't listening, and they're just not watching it. And they have incredible edges. People have big edges over me. They work in the aluminum industry. I see aluminum industries coming down, inventories coming down.
That's the thing that's frustrating is I even look at the plant-based food space, right? And I look at how many people are going toward more plant-based diets or vegan diets, right? And I just tell you 99% of those folks just aren't even, looking at those sorts of stocks. And it's like, man, you're in front of this massive trend that's about to happen over the next, well, it's already happening, right? But it's going to just get much bigger over the next several decades. And I would just say 99% of these people aren't even, looking at these stocks, right? They just don't understand or get it. And they don't understand how big these companies will be. And it's unfortunate.
6 straight months, they see demand improving. In America today, it's hard to get an EPA permit for a bowling alley. Never mind.
I remember working at Quick Trip and all these, guys would come in and buy Monster, Monster Energy. And that was a stock I was investing in back then. Just sell so many cans of Monsters, ridiculous. And unfortunately, I almost guarantee almost none of those individuals that were buying all those products ever bought Monster stock, which was Hansen's natural beverage back in the day. And it's like, man, if only they put 2 and 2 together and hey, I'm getting this. My buddy over here is getting this. Oh, this company's probably doing good. Let me look into this. Oh, it's a public company. Oh, I can invest in it.
Aluminum smelter. So when aluminum gets tight, you just can't build 7 aluminum smelters. So when you see this coming, you could say, wait a second, I can make some money. When an industry goes from terrible to mediocre, the stock goes north. When it goes from mediocre to good, the stock goes north. And it goes from good to terrific, the stock goes north. There's lots of ways to make money in your own industry. You can be a supplier in the industry. You can be a customer. This thing happens in the paper industry. It happens in the steel industry. It doesn't happen every week. But if you're in some field, you'll see a turn. You'll see something in the publishing industry. These things come along, and it's just mind-boggling. People throw it away. One of the things I find a couple of rules I want to throw out that I find useful.
One that frustrates me personally was Netflix. Netflix was, I don't watch a lot of TV or shows or movies, and I never have pretty much my entire adult life. But I remember, checking out Netflix, it's probably 2013, 2014, when I lived in Charlotte, North Carolina. And I just remember seeing the service, watching every once in a while. I just remember oh man, this is the future. This is such a game changer. How many Netflix shares did I ever buy? 0. Not even one. Not even one Netflix share, right? So,
excuse me.
Facts, man. It's tough.
There's a lot of times people buy on the basis the stock has gone down this much. How much further can it go down? I remember when Polaroid went from 130 to 100. People said, "Here's this great company, great record. If it ever gets below 100, just buy every share." And it did get below 100. A lot of people bought on that basis, saying, "Look, it's gone from 135 to 100. It's now 95. What a buy!" Within a year, it was 18. And this is a company with no debt. I mean, this is a company, it was just so overpriced, it went down. I did the same thing in my, I think my first or second year at Fidelity. Kaiser Industries had gone from $26 a share to $16. I said, how much lower can it go? It's 16. So I think we bought one of the biggest blocks ever on the American Stock Exchange of Kaiser Industries at 14. I said, it's gone from 26 to 16. How much lower can it go? Well, at 10.
It's so funny because I've even seen people, that have a lot of money and maybe even have a lot of experience in the financial markets do that same exact thing. Like I've even seen it with Bitcoin recently where, Bitcoin went up to, what was it, 69,000 or whatever at its highs. And, and people are like, oh man, if it ever falls under 60K, you got to load the boat. And then it fell under 60K and now it's under 50K. And now I talk to people and they're like, well, it could fall a lot more. It's just funny. That's just human nature. It's like when it's like up here, people are like, oh, if it drops even a little bit, I'm buying. And then it drops a ton more, and then like, oh, no, actually, I think I'm going to wait. It's like, what?
I called my mother and said, Mom, you got to look at this Kaiser Industries. I mean, how much lower can it go? It's gone from 26 to 10. Well, it went to 6, it went to 5, it went to 4, it went to 3. And now fortunately, this happened rapidly, or I would probably be still caddying or working at the Stop and Shop, but it happened fast. So I was able to, it was compressed. And at 3, I figured out, there's something very wrong here because Kaiser Industries owns 40% of Kaiser Steel, they own 40% of Kaiser Aluminum, they own 32% of Kaiser Cement, they own Kaiser Broadcasting, they own Kaiser Sand and Gravel, Kaiser Engineers, they own Jeep, they own business after business, and they had no debt. Now, I learned this very early. This might be a breakthrough for some people. It's very hard to go bankrupt if you don't have any debt. It's tricky. Some people can approach that. It's a real achievement. But they had no debt, and the whole company at 3 was selling at about $75 million. At that point, it was equal to buying one Boeing 747. I said, there's something wrong with this company selling for $75 million. I was a little premature at 16, but I said, everything's fine, and eventually this will work out. And what they did is they gave away all their shares to their shareholders. They passed out shares in Kaiser Cement, they passed out shares in Kaiser Aluminum, they passed out their public shares in Kaiser Steel. They sold all the other businesses, and you get about $50 a share. But if you didn't understand the company, if you're just buying
$50 a share, and he was talking about 3 there, right? That's a market. It's always been that way. Stocks can be irrationally underpriced, right? They can also be irrationally overpriced. If we go back to this time last year or January of 2021, right? A lot of stocks irrationally overpriced, and the same exact thing happens on the flip side where some of these stocks go down to some levels, and you're like, really? Like, how is this stock trading at this level? This is just ridiculous, right? And then you got everybody piling on to those stocks at that time because they're an easy target, right?
And the fact the stock had gone from 26 to 16, and then it went to 10, what would you do when it went to 9? What would you do when it went to 8? What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it, then it went down, and they don't know what to do now. Do you flip a coin? Do you walk around the block? What do you do? Psychiatrists haven't worked so far. I've never seen them running in. The Psychological Psychiatry Fund I've never seen listed for with the SEC to make it through as a mutual fund. So they haven't seemed to help. I've tried prayer. That hasn't worked. So if you don't understand the company, you have this problem when they go down. Eventually, they always come back. This one doesn't work either. People think RCA just about got back to its 1929 high when General Electric took it over. A lot of double knits never came back. Remember those beauties? Floppy disks, Western Union. The list goes on and on. People saying it'll come back. Well, it doesn't have to come back. Here's another one you hear all the time. It's $3. How much can I lose? I've had people call.
The only way it comes back is that the fundamentals of the company are there, right? If it's a company where the fundamentals just aren't there, yeah, it's not coming back, right? That's just the flat out honest truth with so many companies. The fundamentals have to justify it getting back to those levels it used to be, which when I say fundamentals, I'm talking about the revenue and I'm talking about the net income.
I'm saying, I'm thinking of buying this stock at 3, how much can I lose? Well, again, you may need a piece of paper for this, but if you put if you put $20,000 in a stock at 50, or your neighbor put $20,000 at 50 into the stock, and you put $20,000 in at 3, and it goes to 0, you lose exactly the same amount of money, everything. And people say it's 3, how much can I lose? Well, if you put $1 million on it, you can lose $1 million. Just the fact that stock, this may be a reason to research a stock. The fact that stock is 3 down from 100 doesn't mean you should buy it. And in fact, short sellers, people that really make money in stocks, they don't short Walmart, They don't short Home Depot. They don't short the great companies, Johnson & Johnson. They short stocks down from 80 to 7. They'd like to short it at 16 or 22, but they figured out at 7 that this company is going to go to 0. They just haven't blown taps on this thing yet. It's going to 0. And they're selling it short at 7. They're selling it short at 6, at 5, at 4, at 3, at 2, at 1.
That's exactly what we see, right? They're always shorting, toward the end. And with some companies, that works out, right? As long as the fundamentals continue to deteriorate with that company, the revenues trend down, they take massive losses and just keep taking it, it can work out fabulous and you can get it down to 0, right? But if that doesn't happen and the fundamentals are good and the revenue keeps going up over the coming years and net income keeps going up and the stock price is already down, that's when you get massive short squeezes. So, sometimes shorts, they can be right sometimes, and a lot of times they can just be wrong. It's all about the fundamentals. Always, whether you're going long or short of stock, it's always at the end of the day, over the next 3 years, 5 years, 7 years, it will always come back to the fundamentals of the company.
Order. And to sell something short, you need a buyer. Somebody has to buy the damn thing. And you wonder, who's buying this thing? It's these people saying it's 3. How much lower can it go? Now, here's a subject that you probably all talked about. Getting close.
All right, guys, if you want me to react to more of this in the future, I definitely can. Let me know if you guys enjoy a video like this. I think we'll just stop it here. But yeah, it's just classic stuff. And just so many of those points are just so dang just so valuable in my opinion, and just are forgotten about. And I thought you guys would just enjoy a little vid like this. So yeah, let me know in the comments if you ever want me to react to the rest of this video. Let's say 30 minutes of it. I'm more than happy to in the future down the road. Make sure you hit the subscribe button if you haven't already. Smash the thumbs up button. And if you're looking to scale your portfolio to 6-7 figures and beyond, and you want to join the most successful Discord chat in the world that they didn't have back in the 90s and 80s, check out pinned comment down there. Much love as always, and have a great day.